Netflix stock is up over 14% in the aftermarket hours following its earnings update to investors. Of course, I'm happy about that. I've had Netflix stock rated as a buy for several years now. And of course, for 2025, I rated Netflix stock as a buy. But is the stock still a buy or is it too late to buy Netflix stock? I'm going to review the company's latest quarterly results, incorporate the new higher valuation, and determine if Netflix stock is still a buy for long-term investors. Let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in 2024, for the full year, not just in the most recent quarter, Netflix grew revenue by 16% and operating margin expanded 6 points to 27%. That means in the prior year it was 21%. In 2024, it jumped to 27%. A phenomenal increase in operating margin, by far the best in class for any streaming player. The fourth quarter slate outperformed even our highest expectations, Netflix said. Isn't that what you like to hear as an investor? Squid Game Season 2 is on track to become one of the most watched original series ever. And the Jake Paul and Mike Tyson fight became the most streamed sporting event ever. And the Christmas Day NFL games were the most streamed NFL games in history. So the company demonstrating its massive reach, its massive scale to deliver these kinds of events that benefit from a large audience. That's something that the sports world has been missing out on in recent years. People are canceling their cable subscriptions by the millions because it's so inconvenient to have a cable connection. You can only watch these things when you're at home, and to get somebody to come out and set up the cable is a hassle. You have to sign these 2-year, 3-year contracts, and the monthly price is so much higher than subscribing to Netflix. I've been talking about all of these benefits for several years now as part of the reason why I like Netflix stock so much. In 2024, Netflix I had rated as one of my top stocks to buy. In 2025, I've had Netflix stock rated as a buy as well. And these were all part of the reasons I incorporated into my decision making on Netflix stock. So going into 2025, Netflix laid out its priorities, and I'm happy about what is not included here, more so than what is included. So their 2025 priorities are to improve the core business with more series and films that their members love. Also, they want to develop newer initiatives such as live programming and games. So these are sports. And they want to sustain healthy growth. For 2025, they're forecasting $44 billion in revenue, which is $500 million more than their previous forecast, and an operating margin of 29%, which is up 1 point from our prior forecast. So I like that they're not focusing too much on games, right? They just give one little brief mention of games, and that's what I'm happy I'm not seeing there. I'm happy they didn't go on about games and investing more in developing games and adding more of that into their programming, into their offering to customers. They're so good at content. They're so good at shows and movies, and I'm happy to see them getting into sports because I think their scale gives them an advantage against everyone else in sports. And I think if anyone can take down the leader in sports right now, which is Disney with ESPN and its offering around ESPN and ESPN2 and all of that ecosystem, I think Netflix has a chance to do that because of its massive scale. It now has over 301 million streaming subscribers. And if you imagine every household has multiple people, that's just for each household, it has 300 million households. Its scale, its reach could be approaching 1 billion individuals. And so sports benefits from scale because it's so expensive to pay for the content. The new rights for sports content are getting so pricey that many of the studios that previously owned sports content are not renewing, or they're renewing at smaller scale because they can't justify that expense of paying so much for sports programming if they don't have that many subscribers. But Netflix does have that many subscribers. They have over 300 million subscribers. So they can spread out the cost of sports programming across a broader base and thereby lower the cost per subscriber to pay for sports. And so Netflix is in a great position to capitalize on that opportunity. And I like that they're taking it gradually. They're not like jumping all in and saying, we're going to buy the whole season rights for the NFL or the whole season rights for the NBA. They're picking and choosing, testing, right? This is an important test, what they saw during the Christmas Day NFL games, to see what kind of customer response they get, as well as the Mike Tyson and Jake Paul fight, to see what kind of response they get. And they can use that response to then make decisions on bidding for new sports rights. And so they can continue iterating in that way and building that side of the business in that way. And that can bring millions more subscribers to the service and attract even more people to cancel their cable subscription and completely move over to streaming, because that's really the main reason why people still have a cable connection. That, and they might live in an area that can't get a streaming internet connection. But sports is still primarily on live TV, which most people get through cable. Of course, you can get the live TV through streaming apps like Hulu Live TV and YouTube Live TV, but most people get it through cable. And so now that sports is even moving towards streaming, that unlocks that last layer of growth for streaming businesses. I mentioned already they have over 301 million streaming paid memberships. This quarter was a record quarter for the company, the most in its history, adding almost 19 million subscribers. That's the most in its history. And in fact, that's almost as much as they got over the last 3 quarters. That's how big this quarter was. That's why the stock price is jumping by as much as 14% on the back of this news. It's the streaming subscriber additions that's doing that. Not only that, but this is profitable growth. Netflix didn't grow by offering people lower prices or incentives to sign up or giving them a free trial. They grew because the content they're offering is attracting customers. Their day-to-day business is such a good customer value proposition that it's attracting customers. Right? So after the stock price increase, Netflix is trading at a forward price to earnings of 32, which is near the higher end of where it's traded for going back 1 year. But looking back 1 year and looking at the business today, you're getting a much better business today than you were getting 1 year ago. In fact, if you look back, let's say to the fourth quarter of 2023, Netflix had 260 million global subscribers, and now they have 302 million. So they've added roughly 42 million subscribers in the year. So you're getting a business that has 42 million more subscribers. You're also getting a business which operating margin has jumped to 22% in the latest quarter, up from 17% in 2023. Also, the operating margin for the full year jumped to 27% compared to 21% in the same time last year. Netflix is a business that's foundationally built on economies and scale. And this scale that they just eclipsed in the latest quarter, the 19 million additions, makes that powerful even more powerful, makes that powerful advantage even more powerful, because now they've added even more scale. So all things point to Netflix still being an excellent business. And if I were to update my recommendation today, which I am doing, I will reiterate my recommendation and keep Netflix stock rated as a buy. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.